If you own Tesla stock, what happened in the last 90 days should terrify you. But Wall Street analysts are still telling you to buy the dip, yet the smartest money on the planet is running for the exits at the fastest pace in 13 years. We tracked every insider trade, every hedge fund move, and every regulatory filing. What we found will shock you. First, the delivery numbers everyone missed. Second, the insider selling that tells the real story. Third, why the robotaxi narrative is built on nothing. And fourth, the SpaceX threat nobody's pricing in. Let's start with the number that changes everything. Tesla didn't just miss deliveries by 7,600 cars. They built 50,363 more cars than they sold. That's not a supply chain win. That's a demand problem that's about to crush their margins. Tesla didn't just miss delivery numbers. They missed them in the worst possible way. The company delivered 358,023 cars in first quarter. Wall Street expected 365,645. That's a miss of 7,600 vehicles. But nobody's talking about what happened behind the scenes. Tesla built 50,363 more cars than they sold. That's not a supply chain victory. That's a demand crisis. Those 50,363 unsold cars are sitting in parking lots right now. They represent working capital tied up in cars that are losing value every day. Tesla's gross margin is already down to 18%. Net margin is just 4%. When you have 50,000 cars you can't sell, you cut prices. When you cut prices, margins get crushed. This is basic math that a 291 times earnings ratio can't survive. Revenue growth is already negative at 0.8%. Earnings growth is falling at 25.3%. The auto business that still makes up most of Tesla's $94.8 billion in sales is shrinking. Not growing, shrinking. For a company valued like a tech giant, this is death by 1,000 cuts. Every unsold car is proof that Tesla's growth story is over. Those numbers tell one story, but the money tells another. And when insiders speak with their wallets, you better listen. Wall Street analysts are screaming buy the dip. But the smartest money on the planet is doing the exact opposite. Hedge funds just dumped Tesla at the fastest pace in 13 years. That's not a coincidence. It's a signal. While retail investors chase the robotaxi dream, big money is looking at the actual numbers. Tesla insiders sold 20.8 million worth of stock in the last 90 days. The number of insider purchases during that same period? 0. Not one single insider bought even a single share of their own company. When the people who know Tesla best are selling everything they can, that tells you something analysts won't. The money trail doesn't lie. Think about what this means. These are the executives who sit in every board meeting. They see every internal report. They know which way the wind is blowing before anyone else. And they're all heading for the exits. Board director Kathleen Wilson-Thompson sold $10.7 million in February and another $9.27 million in March, nearly $20 million from one director. And the number of insider buys in that same period? 0. The smart money is running. But there's one more problem that could break Tesla's back completely. Tesla's entire future bet is on robotaxis, but the math doesn't work. The timeline doesn't exist, and the rules aren't written. Elon promised robotaxis would be generating money by now. Instead, NHTSA is investigating 3.2 million Tesla vehicles for safety issues. You can't launch a robotaxi service when regulators are questioning if your cars are safe to drive. The investigation covers autopilot and full self-driving features across multiple Tesla models. This isn't a small probe. It's a deep dive into the core tech that Tesla claims will power the robotaxi fleet. Meanwhile, Tesla burned through billions developing this tech with zero revenue to show for it. The company spent years promising robotaxis would solve everything. Lower car prices, higher margins, unlimited growth. But promises don't pay bills, and investors are starting to notice. The robotaxi narrative was Tesla's get-out-of-jail-free card. It explained why a car company should trade at 291 times earnings. Without it, Tesla is just another automaker with shrinking sales and crushing competition. The narrative is collapsing in real time, and when the story breaks, so does the stock price. All of this would be bad enough on its own, but there's one final twist that makes everything worse. For 15 years, Tesla had something no other stock could offer. It was the only way to bet on Elon Musk. Tesla retail investors weren't just buying a car company, they were buying into the Musk brand. The vision, the disruption, the future. But that monopoly is about to end. SpaceX is going public. For the first time ever, Tesla's most loyal investors will have another Musk option, one that's actually growing. SpaceX revenue is exploding. Government contracts are pouring in. The space economy is just getting started. Meanwhile, Tesla is fighting for market share in a crowded auto industry. When SpaceX hits the public markets, Tesla's retail army gets a choice. Stick with the shrinking car company or jump to the rocket ship that's actually reaching for the stars. This isn't just about losing investors. It's about losing the believers, the people who held Tesla through every dip because they believed in Musk's vision. When they have somewhere else to put that faith, Tesla becomes just another stock. And just another stock doesn't deserve a 291 times earnings multiple. Now you see the pattern everyone's missing. Tesla is trapped in a perfect storm. 5 problems hitting at once. First, the core auto business is dying. Deliveries missed. Inventories building at 50,363 unsold cars. Margins are getting crushed from 18% and falling. Second, the money is fleeing. Insiders sold 20.8 million with 0 purchases. Hedge funds are dumping at 13-year highs. Big money knows what retail doesn't. Third, the macro is working against them. The dollar is strong. That hurts Tesla's international business that makes up nearly half their sales. China and Europe deliveries get more expensive when the dollar rises. Fourth, the narrative is cracking. The robotaxi story has no regulatory path, while NHTSA investigates 3.2 million vehicles. The 20 billion bet has no timeline and no approval process. Fifth, the loyalty is splitting. SpaceX is going public. Tesla's retail army gets their first alternative to betting on Musk. This isn't one problem. It's 5 problems that feed on each other. The 291 times earnings ratio was built for a growth company with a monopoly on Musk's vision. But Tesla isn't growing. It's shrinking while losing its unique appeal. What should you watch? First, the next earnings call. Tesla needs to explain how they'll clear 50,363 unsold cars without destroying margins. If gross margin drops below 17%, the math breaks completely. Second, watch NHTSA. They just upgraded their investigation to engineering analysis covering 3.2 million vehicles. Any negative ruling kills the robotaxi narrative completely. Third, watch the SpaceX IPO timeline. When it launches, Tesla's retail base gets their first real alternative to the Musk story. Fourth, watch the dollar. A strong dollar makes Tesla cars more expensive in China and Europe, their biggest growth markets. The next few months will decide if Tesla is a car company with shrinking sales or a tech company with unlimited potential. The data says car company. The stock price says tech company. One of them is wrong. Now you understand what most Tesla investors still don't see. The smart money isn't just selling. It's running 20.8 million in insider sales with 0 purchases tells the real story. The delivery miss isn't about supply chains. It's about demand. 50,363 unsold cars means margin compression is coming. The robotaxi narrative has no regulatory path, while NHTSA investigates 3.2 million vehicles. And for the first time, Tesla's loyal retail base will have another Musk option when SpaceX goes public. 5 problems, 1 stock, a 291 times earnings ratio that was built for growth, not shrinkage. When insiders sell everything and buy nothing, the message is clear. The only question is whether you're listening. Hit subscribe so you don't miss the next deep dive into the stocks that matter to you. Ring the notification bell. We'll see you in the next one.